Hello, it's Cryptolyze. I hope you are well this Monday, 27 November 2023. We're meeting today to talk BTC, to talk crypto. And yes, it's daily. We'll start right away. As a reminder, you always have the possibility of having free access to the educational course, which is a 60-hour training worth €400, which allows you to learn blockchain, crypto, investment, analysis technique, trading, everything to become profitable. Through 130 videos, 400 pages of guides, quizzes to find out where you are in your progress, and all for free. To have access to this lifelong training, simply use the platform of one of our partners. Everything is explained in the comments and descriptions. Thank you everyone for being there for yesterday's live to celebrate the channel's 2 years. It was just great. In any case, personally I loved it. We were still more than 1,700. So live, it really makes me happy to see you again. Thank you all for the 31,000 subscribers. Once again, it's a pleasure and we'll continue for another year. And we're going to start in the news with Bitcoin, with a transaction fee behind it that was $31 million, or a little more than 80 BTC and GT. I believe something like that. It's his 85 BTC in fees, which was given therefore very important, and which leads us to the following reflection, which we also started during the live, which is that the halving has still important from the moment we will have transaction fees, which will be sufficient to ensure that mining is profitable. And that is the question which is really the most important, especially since we see that we have a return here of the volume of transactions, and especially a volume of fees from these and got transactions there. So this implies that blocks are increasingly contested, and therefore behind this we have an increase in transaction fees linked to income, and therefore linked to the validation of blocks. And so what will happen when we have transaction fees that will be sufficient to compensate for the halvings behind? So this means that miners will no longer depend on the generation of BTC by the protocol, but on transaction fees for using the network, as we have seen during the different cycles. We always have acceleration phases, like for example here during the bull run, where we find real acceleration. Would we be in the same schematic here? So we would have a start of acceleration to see the bull run. Or is it, for example, ordinals, as we were able to experience it here in May 2023, before having a decreasing phase? But would we have this acceleration phase as we experienced here in May 2023, with in particular the ordinals, before having the rather classic drop, and it comes back to the top? And if we ever have projects that build around BTC, allowing us to have a significant transaction volume on BTC, while still having a notion of scalability available to be able to have the possibility of being able to validate on BTC without validating on BTC. We have several projects that revolve around this, and which could precisely give strength to Bitcoin and miners through the increase in the volume of transactions, and therefore behind other income, as the release of BTC by the protocol. And I think that this is really the important point that we will have to monitor in the following years, and which would make it possible to give Bitcoin a new scale, and above all to separate itself from the 4-year cycle with the importance of having in it. Other big news, we have Cosmos, and in particular its community and its DAO, which have approved to reduce inflation on Atom. We have moved to 10, and that is very, very important. We went from 14, which oscillates between 14 and 20, to 10 directly. So it's a big reduction. And we see that we still had a speech which was relatively heated, in which we had 41 for versus 38 versus. So it happened just, and we know very well that since we had Cosmos 2.0, the Cosmos entity, it is the DAO which is behind Cosmos, seeks to evolve its protocol, but it's not that simple. There are many, many complexities, especially a lot of discussions, and I think it will be done little by little. In any case, it's rather beneficial. The less inflation there is on Cosmos, that means there is less bearish pressure on Atom, and behind a token in GT, which begins to gain value little by little. Ideally, what we would need is a small burn mechanism to manage a form of regulation a bit like we can find on Ethereum, depending on the volume. With shared security and interoperability, we have a value that is given to Atom, and we would like it to continue in this direction. Besides, I made you a video on Blast a short time ago in which I told you that the system and the communication that was carried out in GT was really blah blah, And that made me not at all want to go into it, and in fact there are some who even went so far as to characterize it as a Ponzi. At the same time, it's true that the communication is really turned Ponzi-ike, and the founder defends himself from this by explaining that no, it is not a Ponzi, that it is really managed, that there is really real yield, and that it is redispatched. And it is true that there is another problem, is that currently the protocol, which recovers the funds, for Blast, so they are still relatively consistent from the start, are managed by simply a multi-sig, and there are only 5 people managing this multi-sig. That implies that it is enough for them to start with 5D agreement, and they will be able to do what they want and do. So it raised a lot of questions about what's next and what's really going on behind Blast, to the point that we also have a position from one of the VCs behind it, which is Paradigm, who explains that it's IS and GT. Anything goes with their communication, and openly criticizes Blast. After Paradigm, we are careful because it is a VC which is specialized in pump and dump. So it is the extreme valuation of different technologies and to directly sell its tokens very quickly with a negotiation of a much lot weaker than the others to be able to sell. So we just watch out for this guy. Protocol. Do not hesitate to watch the video on Blast. It is very important. I have given you all the information. Another thing, and we'll end here for the news, I've made it available to you. So here this link will be in comment and description. A guide of over 40 pages to be able to understand my investment strategy, to be able to have the basics to be able to invest in crypto, and in particular be able to manage, whether buying or selling, for example, a bull run, and be able to follow the evolution of the course little by little. And this is very important. You get it in comments and descriptions. At the macro level, we will mainly talk about the monthly closing which will arrive this week, in which we still had a huge month in November, with a very large valuation linked to the S&P 500, in which we have almost swallowed 2 whole candles, which is really impressive. And what is interesting to see is okay, but what is it mainly linked to? And that's very important to get the SPX ratio on NASDAQ, which allows you to simply see the weight of the NASDAQ compared to the SP 500. The deeper it goes, the greater the weight of the NASDAQ and the greater the acceleration which is linked to the SP 500 is linked to the NASDAQ. So that means that the more we have an outperformance of the NASDAQ, and what is important to see is that this is the case, we will soon make a new low. So that means that we have never had so much tech weight on the SP 500. And I think that has continued. And it is mainly due to artificial intelligence, this acceleration that we have had since 2022. We can clearly see here a big weight January 2023 bearish breakout, and we see that we are in a phase of recovery. And I think that if we ever break this level, it is precisely the advent of technology and the weight of technology in the evolution of the American economy, which will say a lot about the subsequent impact of certain titles as we could see on NVIDIA. In any case, we also have the DXY, which is the representation of the dollar versus a basket of sight, which is important to see the weight of the dollar over the whole world. We see that we had a very nice acceleration here which was linked to the valuation of American Treasury bonds, which quite simply reversed itself, in which we made a reintegration of the range, which we can clearly see, a range monthly, which is very present here, with the upper part, the lower part, and in which we have made a break, retest, failure, reintegration, and therefore we find ourselves here in a big red candle, in which we are almost in the middle, so it is very likely to retest the 101 quite quickly. And moreover, at the level of BTC, we are going to look a little bit at where we are. We closed last week a very nice candle in CME, therefore, Chicago Mercantile Exchange, which closes on Friday evening, where we see that we made a very beautiful candle. We closed above the previous ones, and we see that we start in a candle which is rather negative. And if we take a step back, finally we zoom in a little bit rather, we will end up on something which is a little different, in which we will have a range with the high parts, the low parts. We see that we did a little hunt for liquidity, which was swallowed up instantly. Rejection and then re is bearish, in which we are rather classic. Okay, we create liquidity at the top. We are creating liquidity at the bottom. We have just come out of a big bullish movement. We had a classic bullish creek, so a zone of liquidity grinding which is taking place little by little. We are arriving in a lateralization zone, so there is something and got, which is rather normal and in which we expect this kind of lateralization to be able to have a price that breathes, in which we will accumulate liquidity at the top and at the bottom. And I think it is possible to find ourselves and stay in this lateralization zone for a while longer if we don't have any news. Because the month of December is not necessarily the month that performs the best in terms of cryptos. And therefore, generally, this is where we have a decline volumes and GT. And so something which will look more like this before having a break either bullish or bearish depending on the month of January. And we would have a month of January which would be either upward or downward, and which would set the tone overall for the first quarter 2024. At the level of BTC small monthly vision, the same we are going to make a very nice close here. On the other hand, we can clearly see that the candle is no longer at all with as much volume, as much acceleration as we could know in October. October, which was a month which if we could actually separate the candle, we would have something which would be really very impulsive on the last week of October, the last 10 days of October, while the rest was relatively flat and limited to one candle, which looked like this one, and the rest, in fact, was really done in the last part of October. And why not have the same thing for this month of November, this end of the month of November? Because the end of the month, it's not tomorrow. If we still have a little time, we could have surprises on this bullish acceleration that we are waiting for, that many are waiting to get, the 42.0, which we have already talked about several times. Short term. What is interesting to see is that in fact we had the valuation of Thanksgiving with behind the liquidity gain of the 38,000 until a retest of the 38,400 reintegration into the range. And we see that behind us we consolidated during the weekend, we made a bearish breakout on Sunday, and then we had a hunt for liquidity with the opening of the Asian market and a second hunt for liquidity. Two things to note. Firstly is that in this downward acceleration we did not go for this lot. Very important. That implies that we are still holding this upward trend, okay? Same here in this retest, which is clearly a bearish retest. We did not break this lot, so that implies that the opening of the American market will be important. We could very well have a small retest here to make a bearish breakout if we ever have validation. And therefore, at this moment, and GT. And gaunt for me, we would go and get this inducement here to do a retest in these areas. Okay, on the other hand, if we keep this part there, we will just remove all that to have better visibility. But if we ever maintain this lot there, and the opening of the American market is in an acceleration phase with a rupture there that's sub, I expect that for me we will go and retest the 38,000. And above all, break the 38,000 to consolidate on a higher part if we manage to consolidate above the 38,000. And behind that necessarily means that we will go and get the 42.0, which is the target that has been going on for some time, in which we have quite a bit of liquidity, and which would be a very nice monthly close and perhaps a month of December of bullish breathing, to then arrive in a lateralization and prepare a Q-on 2024, which could be a little more aggressive on the downside, which is rather something that we know and is rather classic in terms of cryptos. On open interest, very interesting. A view this time weekly to show you that open interest on Binance is still very low, especially with what is happening at Binance. And even if we aggregate all open interest contracts, we see that we still remain very low on levels which are still, in fact, below the lowest levels. And therefore, the part of the bear market in which we plunged, where we really had open interest work being done, there this is still not the case. So we are still in a phase for me between two. Despite the liquidity taking of 38,000, we can clearly see that we have broken down the important wall. Despite the work here that we can see of the CVD, which was very aggressive in the acceleration, we sees that we are having a market that is much less present, and GT, less aggressive, and therefore that means that we are still in the validation of a lateralization setup, and we see that our lateralization, which is located here. And here we still have a lot of liquidity, which calls for blowing up precisely this induction, and go and rework this order block. There we really have a signal, and we have this area which is important, in which we have an imbalance which is very present, and that I will really monitor the work of the course if we return to these zones of 36,200. I think I will intervene in this zone. I hope you liked this video. If so, don't forget to leave me a like and a comment. It always makes me very happy, and once again, thank you for these 2 years. Thank you for these 31,000 subscribers, and we meet at 13:30 to talk about Juan, Harmony's crypto, and see if a comeback is possible.